IBM just had the single worst day in its entire history. Down almost 26%, worse than Black Monday, 1987. Add ice-cold inflation and a $53 billion PayPal buyout, and you had one of the wildest tapes of the year. Let's break it down. Yeah, how's everybody doing? SheldronFrost here, the Frost Man 21. Let's run the whole tape. The movers, the setups, and what's ahead. Let's go. Here's the plan. Where the market stands after that inflation report. Then the movers, a PayPal takeover, IBM's record crash, and SK Hynix ripping. Then two setups I'm still watching, ACHR and Rave. And what's ahead this week? First, the recap, where we really stand. The last confirmed close was Tuesday, and it was green but split. The S&P added about 0.33% to 75.43. The Nasdaq jumped 0.9% to 26,107. But the Dow barely budged, basically flat, held back by one single stock. IBM. Here's the story under the hood. Cool inflation lit a fire under chips. The semis jumped 2.5%. But IBM's record crash and a sell the news reaction in the big banks pinned the Dow. Growth ripped, the broad market didn't. And today, Wednesday, is still moving with CPI and more earnings. So why did it all move? One word, inflation. June inflation came in ice cold. The headline number actually fell 0.4% on the month, the biggest monthly drop in over 6 years, as gas and energy cratered. Year over year, 3.5%, cooler than the 3.8 expected. And core was just 2.6, cold across the board. And here's why that's a big deal. This Fed was actually talking about raising rates into the July meeting. Half the officials floated a hike. That cold print pulled the trigger right out of their hands. Odds of a July hike cratered from about 42% down to 17%. The 2-year yield dove. But don't get it twisted, September is still live. This cool July, it did not end the hiking cycle. A pause, not a pivot. Now the headline of the day. PayPal. TKPYPL. Reuters broke it late Tuesday. Stripe teamed up with the private equity firm Advent, put an offer on the table to buy PayPal. $60.50 a share. That values PayPal north of $53 billion, about a 28% premium to where it closed. And they've already got $50 billion in bank financing lined up. PayPal popped hard on the news. But here's the honest part, and this matters. Both companies are staying quiet, nothing is signed, and they're pushing to get it done by month end. The stock's trading at a discount to that 60/50 offer, and that gap is the market voting on whether it actually closes. 47.47 is the pre-news line. No deal, and it fills back down toward there. Earnings hit July 28th. Look at the chart. PayPal was dead money in the mid-40s for months. Then the buyout headline. That gold line up top is the 60/50 offer. The gap between where it trades and that line. That's the market's live bet on whether the deal actually closes. Story of the day. IBM. IBM just had the single worst day in its entire history. Down almost 26% on Tuesday. That is worse than Black Monday, 1987. A 115-year-old blue chip. A record high just last month, and now a record crash. Absolutely brutal. Why? IBM pre-announced weak numbers a full week before its real report. Revenue missed at $17.2 billion. The CEO said large deals failed to close, and clients pivoted their spending toward AI servers and memory. The mainframe business fell 7%. Translation: the AI money is flowing to chips, not to IBM. The setup: it bounced less than 1% Wednesday. That's your classic dead cat test. 213 is the line. That's Tuesday's low. Lose it, and there's air below. Above, 290 is a distant ceiling now. But do not guess this one. The real earnings drop July 22nd. I'm not catching this knife before I see the number. Now the one you asked me about. SK SKHY is SK Hynix, the Korean memory giant, and it just IPO'd on the Nasdaq. A $26 billion debut, the second biggest US listing ever. It ripped Tuesday. Now real talk, because I want you to have the honest figure. That 50% number floating around, that's the premium of the US shares over the Korean ones. The actual daily pop was about 27%. Still a monster move, just the real number. Three things lit it up. Barclays started coverage at overweight. South Korea dropped a $500 billion AI budget, with Hynix a named winner. And brand new 2x leveraged ETFs launched on it, forcing mechanical buying. It's the AI memory shortage trade. The IPO price, $149, is your support line. Lose that, and the party's over. SK Hynix only has 4 days of chart. It just IPO'd. But the range is already wild. Priced at $149, ripped to $194, then pulled back. $149 is your line. Lose the IPO price, and the party's over. All right, 2 setups I'm still tracking from last time. ACHR and Rave. ACHR Aviation, the electric air taxi play. It bounced almost 7% Tuesday, right off its 52-week low at $451. Still pre-revenue, still burning cash. But it's furthest along on FAA certification, and it's the named air taxi of the LA 2028 Olympics. The setup hasn't changed. It's a box. 450 is the floor. That's the 52-week low, the line in the sand. 540 is the ceiling. Only a reclaim and hold above 540 flips it bullish. Until then, it's a range grind, so size it small. It's a lottery ticket. Here's ACHR on the chart. Straight down all summer from 650 into the low 4s. It's sitting right on 450, that green floor, the 52-week low. Hold it and it bases. Lose it and it's fresh lows. 540 is the ceiling it has to reclaim. And Rave Restaurant Group, the little pizza in and Pi 5 play. It popped 3% Tuesday on basically no news and almost no volume. But quietly, it's profitable. Over 20 straight green quarters and no debt. Pizza Inn's growing, Pi 5's the drag. It's a range play, $3 to $3.75. It's so thin, some days trade 10,000 shares, so use limit orders always. Break and hold above 341 on real volume and 375s in play. Otherwise, accumulate down near 3. And Rave on the chart, quietly climbing from 260 up to 330. It's a clean range, 3 to 375. That gold line, 341, is the breakout trigger. On volume this thin, limit orders only. Last thing, what's ahead? The rest of the week is loaded. Today, Wednesday, PPI inflation and the brand new Fed chair, Warsh, testifies. Thursday, retail sales, plus the big one, TSMC and Netflix earnings. Then next Wednesday, Tesla and Alphabet both report the same day, right before the Fed goes quiet ahead of the July 29th decision. So the through line today, cold inflation flipped the Fed from hikes to hold, at least for July. And that's rocket fuel for growth in chips, which is why SK Hynix flew. PayPal's a buyout gamble, a real offer, but an unsigned deal. IBM's a falling knife. Wait for the real number. And ACHR and Rave, trade the levels, not the hype. And always verify every level live before you touch it. This is what I'm watching, not advice. Stay disciplined, manage your risk, and I'll see you in the stream. Frost out. 3 rules every trade needs. Number 1, a target. Know where you're taking profit before you ever enter. Number 2, a stop loss. Know where you're wrong and honor it. Number 3, time is your friend. The best trades come to you, so don't force it. Let it come. Position sizing. Never risk more than 1% of your account per trade. Set your stop the moment you enter. This is not financial advice. Educational content only. Do your own research. Trade at your own risk. If you guys like this content, follow, subscribe. Throw me something in the comments. I'm here to help you guys. Happy trading, happy investing. I'm live every weekday at 9:30 Eastern. Come hang out.